Hello there, it's Stefan Angelini from Angel Advisor. It's the 20th of February, 2023. Here's a quick economic update. Today we are talking about 2023 expected returns, investment themes, and changes that people have been making over the last few months, bank margins and the pressure they're getting from the government, resources and green energy. We're talking potential super changes and the effect that might have on tax, and if you've got a large super balance, what to watch out for. And then finally, crypto crackdown for all your crypto maniacs out there. Just to let you know that we are investment professionals, but any information you hear is just general information. Please don't consider it as personal advice. If you want any personal advice, please go and speak to your licensed financial advisor. And if you're looking to reassess your investment portfolio, reach out to us at hello@angeladvisory.com.au. Great. All right, so let's get into it. Last week, everything was down: Australian market, US market, European market, Asian market. Now, not that bad because January was still a stellar month, so just coming off the boil a little bit, but with a lot of earnings coming out and expectations after the US had a lot of reporting in January. No doubt things are off on the back of that. What we are expecting from 2023 and investment performance in 2023, let me give you some data from historical returns, and a lot of the times that the past paints a picture of the future. In 86% of the last 72 years since 1950, a positive January has seen a higher US stock market return 83% of the time since 1950. So by the end of the year, it is up. Now, will this be the case for 2023? January was a stellar month. It was really good. So a really good start to the year. So history does tell us, at least over the last 72 years, that when it starts positive, there is a high likelihood it will end positive as well. So let's hope that that occurs this year. In terms of a few key changes and rationale that people are making to their investment portfolios, this is from a really large, probably the world's largest fund manager. So what they're looking at now is they're more favorable over Australian equities as opposed to unhedged international equities. Unhedged means if the Australian dollar gets stronger, then you will lose money on that international investment. Hence, they are increasing their weighting towards foreign exchange hedging. Hedging means you are hedging your bets from a currency perspective, so you don't lose money as the Australian dollar gets stronger. And they see the Australian dollar getting stronger because of commodity prices in Australia, and that will just boost up our dollar, given it came off a fair bit throughout 2022. Finally, they are optimistic on China and the economic reopening as it gains pace. So it's starting to firm up. Things are looking well. People are out. People are spending. So it's going to be interesting to see how actually companies perform in that environment. Let's go to banks. So banks have been reporting record profits. This is on the back of the Commonwealth Bank reporting a half-year profit of $5.15 billion. And basically, a lot of politicians have now got up in arms and saying, how can you pass on more of these interest rate increases to your clients than you should be? So they're now looking into this and how they're doing it. And if you didn't know, a little stat for you, there's $1.3 trillion of household debt and household deposits. So it's quite interesting to see. It's quite a big environment, and banks really are profiting off this. In terms of resources and green energy, so iron ore is still remaining as one of the staples for this year. People are seeing as iron ore to be really strong throughout 2023. But importantly, out in the Pilbara, whereas they do pull a lot of iron ore out of the ground, there has been a lot of diversification from these companies out there towards green energy. So lithium, rare earths, and other green energies are coming up and becoming more and more in demand. And there seems to be a lot of deposits here out in the Pilbara for these kinds of things. Still, the core is still iron ore, and that's the main one for that region anyway. In terms of superannuation, what you can expect from superannuation changes from the budget, from the government in the new budget that's coming out, there is most likely going to be a challenge on the amount of money you can have in superannuation. So there's more than 11,000 Australians that have more than $5 million in super. And that costs them about $1.5 billion a year. A little statistic that if there were, if you kept the cap in super at $2 million per person, you'd be able to increase revenues by about $2.8 billion each year. And that's what the government's looking at doing, because how are they going to get this budget deficit down? By raising more revenue. Where can they raise the revenue from? Rich people that have built up their superannuation balances. Importantly, so you all know, at the moment you can have $1.7 million in what's called an account-based pension, and that's a tax-free earnings within super. Now that's looking to increase. It might increase to $1.9 million and also watch this space in terms of contributions because indexation will increase. So at the moment, you can make concessional contributions of $27,500, but most likely it's going to increase fairly substantially come the turn in July. Finally, if you're a crypto maniac, watch out because there's now a lot of crackdowns in crypto. So governments around the world have started to crack down on this, particularly in the States with their SEC, Securities and Exchange Commission, getting stuck into a few big companies, the likes of Gemini and Kraken, and basically using rules around unregistered securities to crack down the hammer on these kinds of cryptos. So if you're in smaller crypto plays, just be aware of that political risk that it may play on the returns in your portfolios. Other than that, have a great day. It is Monday, so let's get excited for the week. And I'll speak to you in the next few days. Cheers. Bye.